Hi, good morning, everyone, and welcome to the 46th episode of Let's Talk About Market. Sorry, yesterday I could not do this live session. That is because some work came up and that was unavoidable. So that's why I couldn't do yesterday. But the great part is that the Nifty index has not only broken above the previous high of 25,330, but now it is, also trying to break above the important resistance level of 25,450. Now what it means for the market and where are the pockets of opportunity, those are the things that I want to focus more on today. So let me quickly share my screen, and someone can please confirm if you all are able to see my screen properly. Okay, and I hope you all are able to hear me also properly. Just give me a minute. I hope you all are able to see my screen properly, and I hope you all are able to hear me also properly. Can you please confirm in the chat box? Can someone of you please confirm in the chat box if you all are able to hear me properly? Uh, Wait, I guess I got the confirmation from my teammate. Okay, so let's get started. Uh, See, for the Nifty, thanks Ramesh for the confirmation. So when we look at the Nifty index, the important thing was, I had spoken about this, uh, that 40 hour was an important support level. Over here the Nifty index did break the 40 hour for a brief while, but it again came back. And after that, when there has been this crossover, the Nifty index has been inching higher. So broadly, if you see, I mean, this was the first resistance level that I was looking out for, whether the Nifty index breaks or no. So yesterday it just closed around those resistance level, and today it has broken this resistance zone with a good gap as well. So that's a positive sign. Now one more thing that is happening, and which is very very positive, is that the Nifty index is now trying to break out from this entire resistance line. Okay, so if I do this thickness by 1x, you will realize that the Nifty index is, uh, sorry, yeah. So over here you can see, and if you zoom in, the Nifty index is on the verge of breaking this trend line. Now of course we need to see how the closing is and so on, but broadly, this looks like more of a cup and handle pattern that seems to be breaking out. Now if I just measure the length of the cup, okay, from low to high, and I have to think of an upside level. I mean, this gives a very uh, big upside level of somewhere around 30,000 or so. Okay, now let's see if that is possible or no. So one thing is that, this cup and handle pattern seems to be pointing out towards that. Now the other interesting thing is that if you see the weekly chart, okay, what we are now seeing is an up move, consolidation has happened above the averages. Over here the RMI has almost come back to the zero line, and now it is turning around. So ideally, my expectation would be that if the Nifty index breaks and sustains above this resistance line, then we should be getting next leg of up move, like we had seen over here, right? There was a bullish crossover, and then we saw one big move in the Nifty index. I think that is what the expectation will be in the Nifty index. Now if you see, we have been talking about this for quite some time now, which is the sentiment indicators and the positioning of the FIIs. I mean, this their position is as bad as it can get. You can see over here, while the Nifty index is just 2-3% away from the all-time high, the FII's net index position, I mean net position in the futures index, is at the lowest ever that you will see in last 12 years. Okay, And if you see the data, you will realize that what has happened every time. So let's go back all the way to 2012 and see what has happened. Market bottoms, their short position starts covering. Okay, over here also you can see in the intermediate, bottoms are also formed when the short positions are there. Over here also short positions, and you saw a good move. Over here you saw short position, you eventually saw a good move. Okay, over here. So basically, when you look at the history of last 12 years, okay, it was only COVID when they had to cut out their short positions much earlier. That is because SEBI had put restrictions of not shorting and so on. I think those all regulations were there, and that's where there was a bit of a disconnect. But then after that, if you see over here, okay, short position, extreme, and then an up move. Short position, extreme, and up move. So, and you can see that the kind of up move that we have seen every time when the short positions have gone for covering. So over here also we got this 14, 15, 18% kind of move. So on an average, if I now have to do this math, so now see this. Okay, I'm taking it from 2020, after 2020, because that was the COVID period. So over here this was the point where it got extreme. Okay, up move was of 24%. Okay, then you can argue that over here also there was a move, and after that we got into oversold. But yes, I mean, you can see over here this was 18%. Over here the move was almost 12, 13% or so. Okay, from here if you see low to high, the move was 20%. Okay, over here if you see the move from low to high, okay, before it got into this consolidation phase, 18, 19%, right? So over here also you see the move, it was more than 20%. Okay, but even if I catch this top, I mean, there was this 17, 18% kind of move. Okay, here similar story. In fact, you might want to take it only till here, because that's where it started peaking out. But yeah, over here also 16%. Now within this thing, 16%, 17% on an average you can expect. And if I have to put that same thing from the low, so let me just, yeah. So let's say I take around 16%. Now that 16% comes to around 28,350 odd levels. Okay. So that's where I think many of the studies are pointing out towards that level, and I think sooner or later we should be getting to those levels. I don't know whether it would be because of Trump unwinding the tariffs, or is it because of earnings pickup, or what. But that is what the chart seems to be suggesting at this point of time, right? Sorry. So this is what the chart seems to be suggesting at this point of time. And if you see any indicator, okay, if you see any damn indicator, I mean, all of them are towards that extreme. You take client's positioning, right? So over here also, whenever they are at the topmost range, that means they are extremely long at the bottom. Okay, that is what the history has told us, and that is how it has played out. You can see over here as well, you can see over here as well, over here as well, over here as well. Now similar thing is happening over here. The only surprising part this time around has been that the long positions, or for that matter FI short position, has sustained for quite some time. I mean, this is something new that I have seen this time around. But I think eventually everything should resolve on the upside. That is also because if you see the DIS positioning, okay, so DI ka, you won't get much signals, but whenever it happens, it is very reliable signal. Over here also you can see, they were buyers at the bottom. Over here they were buyers at the bottom. Over here also they are at an extreme where it suggests that a good move is possible, right? So if you look at any indicator, in fact, yesterday I was talking with you all about the breadth. Okay, the 20-day ED ratio has actually now come to the first line on the downside, which suggests that the breadth is not that great. You can see over here, right? in this up move the breadth has been steadily coming down, which means that the participation is not there. And that's where many of the people would say that Nifty has gone up but my portfolio is not doing that well. I mean, it's a reflection of the breadth, which is not so great. In fact, today also, while I was checking this, if you see the indices, I mean, they are all up around 0.3, 0.4%, and so on. Okay, none of them you will see up more than 1%. Actually, now auto got into this, but earlier it was also up by around 0.4, 0.5%. Reality was the only one that was sustaining. Okay, but apart from that, if you see the gains, it is very modest. I mean, uh, it doesn't even look like, oh, something great is happening. But if you see beneath the market, a lot of stuff is happening, or it is about to happen. So I am suspecting now that if we get this breakout, then we should start seeing improvement in the breadth. And probably when it comes to around this first level or second level, that's where we'll then be a little bit concerned, whether now is there a case of a top formation, or is that just a short term top. Because you can see over here, right, there was a big spike in average in breadth, then it went through a phase of consolidation, then it again picked up. I mean, this is what happens generally with the short term trends. So AD, if it comes to say somewhere around at the higher levels, on the second line, that's where you can start being a little bit concerned, and you can say that the best of the breadth is behind us. Okay, that does not tell you that the market will top out, but you can safely assume that, if earlier 9 out of 10 stocks were moving higher, now in the up move there is a possibility that only 5 or 6 stocks can move higher. So that is what the indication of breadth tells us. I mean, this is somewhere in the middle. I would expect that as the positivity plays out, and all this indicator eventually resolves on the upside, I would expect that these all indicators to go towards the upper end. And once all of them or most of them come towards those upper zone, that is where we need to be a little bit concerned as to what can happen next. Until then, I think we should see this pick up in the breadth sooner or later. And that's where, I mean, that's the faith I'm having, because I have seen this happening in the past again and again. And I think even in this live show, I have mentioned it many times, drawing similarities from the past. So given that now the Nifty index is breaking out, what is looking good, or where is it that the momentum is now picking up? So I went to the scanners, and I saw only indices scanner. Okay, that's where I actually found out that Nifty is actually breaking out. So if I do this, let me remove total market and let me put it just indices, right? So over here, you can see that in weekly Nifty 100, okay, giving a bullish crossover after a good consolidation. Nifty 200, similar case. Nifty 50, Nifty 500 also, similar thing happening. Nifty Financial Service, we have spoken about this in length. You know, this also seems to be turning around and doing well. And in fact, on the lower time frame, there is a good inverse HNS pattern breakout also that has happened. And we had discussed all about, about all these things, right? Then infrastructure is the one, interestingly, that seems to be looking up as well. So up move, consolidation, and now it is looking up. Mid cap 50, it is looking good. Reality, this was the one which has been completely beaten down, and it had not given any respite to the stocks. But over here also, there is a good base formation that is happening, and now things possibly seems to be turning around. So these are the ones. In fact, metal, if you see on the monthly chart, it is giving a bullish crossover. So that again is a good sign. So that is there. And for today, if you see Nifty Auto, that is now on the verge of giving a bullish crossover after some consolidation. And MNC also is on the verge of giving a bullish crossover. In MNC, I would want to see whether the high is broken, or the 20 days broken on a closing basis or no. That's where it will become interesting. But nevertheless, the pattern over here is good as well. It's just that it is a lot more, it is a bit more early than the other indices. Okay, So these are the ones. Then the other ones, where, so see, I'll tell you what I feel is that this is the kind of market where probably we may not see follow through in the stocks or indices, but there will be some sectors that will be moving, or they will be supporting. Okay. And I think, if we have to take off if we have to consider the indices that have been done, that have done well and that have been doing well, is basically PSU Bank. Over here you can see that there's a clear uptrend. In fact, today when the Nifty index is performing, this index has corrected, but by and large, this has been a good outperforming sector. Even metals, after a bit of a consolidation, now it is trying to pick up. So over here also, in all the trending and good indices, you will see that the averages will not break on the downside, especially the blue one, and that is, the sign of strength that you need to look out for. Okay. So metal, PSU, I think these are the strongest ones. Then the other thing, like you can see the PSU index, up move, consolidation happening, and now waiting to pick up. If you see IT, after a good move on the upside, it is somewhat consolidating over here. So these, I would term it as more of a safer index, okay, which should lend support to index if at all things go bad. I mean, say, if there is some correction in the index and so on, maybe IT index might, lend some support. And also FMCG index. Okay, if you see the FMCG index from the bottom, it is now trying to turn around from the lower end of the range. Okay, so this has been the broader range for the FMCG index, and from there it is now trying to turn around. So the broader point is that if I see all the indices, they are more or less looking up. Okay. It's just that maybe, it can test our patience. So, someday metals will go up, someday PSU will go up, and it can be a rotational market, is what I'm trying to say. But I think directionally these all should resolve on the upside, and that is what, the hope I would be pinning on. And yeah, so the best way then is to scan stocks. And I told you RMI, you can even go with the Dow Trend scanners, where you have those confidence. So you can see over here, like, so this was the outperforming basket which I had picked up through the heat map 2 to 3 days back. But yeah, you can see that within that basket, there are a lot of stocks that are going from down to up on the weekly chart. So you might want to capture those. So the broader idea is that whichever way you want to pick it up, be it based on outperformance. I mean, you want to buy stocks which have shown strength in this entire consolidation. You can go by that. So, say for example, I want to see that from year to year, Nifty index has been flat, right? So from year to year, basically, right? So I'll try to see that in this sideways consolidation, which are the ones that have done well. So what I'll try to do is that I'll go to heat map. This high is 18th of September. So I'll do the custom date, uh, and I'll do 18 September to current date. Okay. And if I am having a top down approach, see, this is what I told you, right? Metals, PSU banks, in fact, bank, financial service, these all are the indices that are actually showing outperformance within this sideways phase. So maybe, you might want to concentrate more on these. If you want bottom up approach, go to NSE all stocks, run the same custom indicator, and you can select all the ones, which have outperformed or given positive return. Okay. So, you just need to click these tabs. Okay. Now please understand that if you don't tick it and you try to save everything, then the entire basket will come into the list. But if you select something, okay, so now say for example, this is 423 stocks which are greater than 5%, 199 and 177. Okay, so there are somewhere around 800 stocks, right? Now if I say over here outperforming stocks 16th October. Okay. Now if I create a watch list, now I have to select everything, then I need not take everything. Select on unselect name and then select it, then everything gets selected, all those 800 stocks. I move to the watch list. I go over here, I select watch list, and you can see over here that almost 801 stocks have come over here. Okay, so I think while we were saving, there might be some which have come up in the list, and that's why we are getting that. So yeah, broadly, as you can see now, these are all the list of outperformer stocks which have given positive return, right? While the Nifty index has been sideways. So now that I have saved this list of outperformers, I can even run scan on that. Okay, the watch list name is outperforming stock 16th October, right? So now what I do is that I remove everything and only select the basket or the watch list of outperforming stocks on 16th October. Okay, now here I can put whatever scans I want. Okay, I will put the scan of new bikes, and I can see that there are 34 stocks that are coming in. Okay, now you might want to see which ones do you find interesting, or if you want to narrow down your focus, you can put further more filters that in weekly it should be buy and new buy. So now we are just left with 21 stocks, right? So you might want to concentrate on these stocks and see where there is a good setup that is happening. Okay, over here IFB agro, you can see daily buy, weekly also there is a buy coming, but over here cycle is not there. So yeah, I mean that way, you can try and you can do all those analysis, and you should be able to come up with some good stocks, with good setups. Like Obra Reality, you can see that there is a bullish crossover on weekly, and daily also there is a bullish crossover today. And Reality, we saw overall index level as well, it is coming into the bullish zone. PNB, you can see there is a crossover, but it has been inching higher, so this need not necessarily be a good setup. SBI also, I think similar thing might happen. So yes, you might want to do some filtration over here and try to find out the stocks which have done well. Okay, also forget about the outperformers. Okay, now you want to see the stocks which are near 52-week high. Okay, because those are the ones you would want to assume that that's where the momentum is. So you can go to heat maps, you can go to NSE indices. Okay, and you can also click over here in the price action. Over here you can put it list of stocks that are away from 52-week high. Okay, now you do that for the indices, you will get the indices. If you want to do it for all stocks, do the same thing. I went to NSE all stocks. Okay, wait, I think, yeah, there is a bit of, yeah, there was a bit of a lag. So now over here I want to do percentage of stocks away from 52-week high. So all the ones, so there are 153 stocks that are within 0 to 5%. Okay, they are within 0 to minus 5%. So these are the ones that are very strong stocks. Okay, and you might want to focus on that. So again, you can do the same thing. Just click on this tab, create a watch list, and you have the list of outperformers in your hand. And then you can try and scan through different views. You might want to do moving average crossover, where is it happening, or super trend, where is it that bullish reversals are happening. You might want to do all those scans, and I'm sure you might find some very interesting stock setup list. So yeah, broadly I think that is what I wanted to highlight to you today. Main is that the Nifty index is trying to break out. I have suggested in the past as well the techniques. I think if you just go one or two episode back, uh, so just for those guys, if you want to see the prior episode where I had discussed about all this, go to Strike Money, go to live over here. and you can watch for this 45th or 44th episode. And over here I had discussed about how to find out stocks and what are the ways you can find out. You can go over there. If you all have any questions, I am happy to address it. Akhil says, what do you expect as the Nifty EPS growth? I don't know. I mean, the expectation is of a 12-13%, but what I read and what I am hearing is that it can be single digit. But the good part is that markets would be forward looking, and in terms of forward looking, the P seems to be now at a reasonable level, assuming that the growth next year becomes 15% or so. That is what the analyst expectation is. But to be very honest, I mean, these are all estimates that keeps revising. But yeah, I mean, that is what I have read and heard about it. And so what people are saying is that based on FY 27, the Nifty is reasonable. Okay, maybe for FY 26 it might look a little expensive because the growth is not there, but from FY 27 perspective it looks good, and that's what people start building in, and that's where you might end up seeing some optimism based on that. So yeah, any questions that you all have related to either strike or whatever we have discussed, please let me know. These days I'm not getting questions. I'm assuming that everyone knows everything now, or they are very well versed with the way to pick things. And Seti, the watch list is limited to 50 stocks. I think this confusion many people have. The watch list is not restricted to 50 stocks. The watch list is restricted to 50 stocks only for RRG. Okay, over here in front of you, I have created a list of 800 stocks, right? But now you can see that this is there in my watch list, right? If I go over here, I have 12 watch lists. Okay, but within 12 watch lists, there are one, two, three, four, five, six things that are under 50. Okay, so when I go to RRG, only this six stocks, I mean, this six watch list will be visible to me. See, one, two, three, four, five, six, or sorry, I might have missed out. There are seven in the watch list that I have seen. Now, this outperforming stock, which is of 800 stocks. Now, of course, you imagine how can we show 800 stocks in RRG? It will be an absolute mess. Okay, so that's where we had restricted to 50. So for RRG, if you have watch list under 50 or 50, you will be able to see it on RRG. But otherwise, you can put as many stocks as you want in the watch list. There are 2,700 stocks as well in my watch list. So, and how many watch list can we have? You can see it over here. We have given the permission to create 100 watch list. I'm sure 100 would be good enough watch list. Okay. Yeah. I know. NCT, you had recommended that. I hope a lot of things might have become a lot more clear to you, because actually strike valuation setup was long overdue. We had not done it, and I realized that. So yeah, I think this week we'll have a webinar, but that will be more of Q&A. Where if you'll have any queries, I'll try to resolve those things. So it will be as usual a Zoom webinar. I think the team will post it in the group. They will post it on Telegram, YouTube. YouTube, no, or Twitter, and so on. So it will be a Zoom meet. So you can come over there. Any other questions you all have? Okay, I can't see any questions. So I'll wait. I'll wait for a minute to see if there are any questions. If not, then I'll have to wind up this session. Any peg or PE based indicator? No. So see, Devesh, over here, the entire objective is to give you on a trailing basis. We don't want to put any bias or anything, uh, right? So the I mean, peg is what, P divided by growth. Okay, so now how do we define growth, right? There is no expectation as such, right? I mean, it is all my personal view, so we don't want to get into that subjectivity part, so we have not given peg. I mean, but peg is nothing but P divided by growth. So if you are expecting that the growth is going to be 20% and the P is at 18%, then you have a peg ratio of below one, which is good. So I don't know. I mean, peg ratio is honestly very subjective. So it all depends on what growth you are baking in. So we did not wanted to go that route. So we have not put peg over here. Uh, Shrurang trading. Okay. Sorry, there was Royal Tiger view on TCS. So see, I had mentioned that all the IT stocks. I don't want to comment stock specific, but all um, all the IT stocks basically have lots of shorts in it, and at some point of time it should lead to a short covering. Whether it can happen in next 10 days, 15 days, 1 month, 2 month, I have no clue. But I have shown enough examples in the past as well that when there are huge short built up that has happened, it usually triggers into a good short covering rally. Time is the only thing that which is not predictable, but I think that trend should play out, and all of these IT stocks also should resolve on the upside as the Nifty also picks up momentum. That's my guess. Where to find valuation video? Let me quickly share my screen and show you. So yesterday we had, I mean, not yesterday, but last week we had done a webinar on valuations. You can find it over here. Go to the YouTube channel Strike Money, subscribe it so that you can get those notifications. And this was the valuation topic that we had discussed. You will find it in the video section, the first one. Okay, moving on to the next one. When I go to valuation chart and create my own setup, that could be some time away. For now, you will have to manage with the strike valuation only. I mean, you will have to go inside that page so that you have those valuation plotted. I don't know the timeline, frankly. Happy Diwali. Oh yeah, season greeting to everyone. Happy Diwali and wish you a very prosperous one. This session is recording. Oh, sorry. This session is recording. Yeah, Lakshmi. So basically, if you go to Strike Money, everything, these live sessions that we are doing, okay, the whichever are the live one, this you will see right now. People would be watching. Okay, if they click over here, once the session ends, it comes over here automatically. So all this session that you're seeing, 45, 44, and all those, these are all the live sessions that we have done it in the past. You can go through them, and check out over here. So for that, you will have to go to Strike Money on the YouTube channel and click the section live. Okay, and click on the selected one. I mean the latest one. FII chart index was helpful. Thanks for the analysis and perspective. Thank you. No, Lakshmi. So at this point of time, we have only explained it in English. So there are some webinars that we have done it in Hindi, but we have not done much, to be very honest. So sorry about that. In market overview, I can see the script I select primarily, but in the graph, I see the graph of the only script where Yeah. So see, these all improvements we want to make, Neeraj. So see, I'll give you an example. What is happening? So now see, I don't have any template over here. It's possibly because you have selected some template. That's why this is happening. Okay. Now let me just click over here. Okay. And I'll help you understand where the issue is. Uh, See, right now if I click everything, it is all okay. Correct. Now the moment I draw a trend line over here, okay, I draw a trend line over here. I click on save, and I put it as uh, trend line. No, stocks looking good. Okay, and I save this as a template. I mean, you can save any name. Now, when I go over here, okay, and I come back to Hindalco, I will always end up seeing this. Now, just imagine that now let me refresh my page. So by refreshing the page, a normal page will open. Correct. Now I am putting an indicator template over here. Okay, which is the trade setup that I usually follow. Correct. But now when I click on Hindalco, it remembers that I have saved something, and it directly selects that template. So this is, I know this is a bad experience, and we want to improve this. So this will do those improvements. But when you do this, basically try not to do any studies in the trend line. But if you do any studies on the trend line, okay, and you save it, just make sure you refresh, so that you again come back to the proper page. Okay, else it will override that, and it will not allow you to and it will remove all the indicator further. Now say for example, I had done something on Hindalco. Correct. Now if I go to scanners, if Hindalco comes into my list and I click over there, then it will overwrite. Okay. Now see, it will override the Rohit setup that we have given it. Okay. So that is the problem. We recognize it. We have asked the developers to improve it. So when they are taking up this trading view module, all this improvements will do it. Okay. But that is what the problem is. The broader point is that refresh that page if you don't want to see that stock. Okay. Right now it's just overrides it, and despite being at any of the screen, that screen will come. So that is the issue right now. We'll address it, as I mentioned. NCT, I don't know. I think I tried to explain you. Uh, I tried to explain you where the issue is. If you still have further issue, please get in touch um, uh, with the customer service, and specifically mention them that Jay had mentioned this issue, but I'm still facing it. Okay. P What is PSI? Do you mean RSI? PSI, DMI, HD? I don't know what you're saying, honestly. Acha, so I think in the valuation setup also this might be getting override, is what you're trying to say, right? I mean, this thing happens that if you have drawn some trend lines over there, now if I go to the strike valuation setup, okay, and I go over here, okay, no, so over here, because we have not given only templates, so it does not override. So I'm not sure, NCT, what exactly the issue is. Please go to the help section, okay, and put in a query. Someone, so Pooja or any of the one who is from a customer service team, they will connect with you. You can just simply tell them that, can you connect me with Jay, this is the issue that I am facing, and I'll try and help you to resolve that issue, because I'm not exactly sure what you're trying to say. That is why. Okay, so please raise a query, and I'll try to explain it. The other question is that where can we see NSE all stock advanced decline ratio? So NSE all stock raw data we are not having in the sentiment indicators. We are putting it a 9 MA. Actually, in the new design that we are looking out for, even in the app, we have put these things. Where the advanced decline will be of overall market as well. At the best, right now, if you want to gauge the market sentiment, probably if you hover over here in heat map and go to advanced decline intraday, and if you select over here total market, because total market represents 750 stocks, you can get some idea of the breadth, how it has been. Okay, but that is the way out for now. But in a new design, you have also made sure that we put the AD ratio of uh, NSE all stocks as well. Okay, which right now is missing at this point. Mandar, I don't want to get into the elite wave stuff. We can you can put in the comments in the India charts and we can take it over there. Mahesh, nice dip in USD. Yes, you are right. So yes, you are right. I mean, when sentiment indicators also confirm that USD INR is also dipping, that is a good recipe. Okay, I have tried to clarify all this. Deepak says, my question today is not on stocks. I want to understand if we can analyze if we are in an overstretched market from a breadth perspective. No, no, no. In fact, the breadth is towards the lower end of the range. So breadth. So actually, what is happening right now is that the market is good, but the breadth is bad. Now, this can mean two things: either the breadth catches up as the market picks up, or the breadth gets worse from here, and that leads to a reversal in the Nifty index. Okay, so see what I'm trying to say over here is, let me show it through the chart. See, typically what happens is that when the markets are rising higher, you would expect that the breadth to pick up. Like say for example over here, you can see that the breadth was becoming bad in this phase, and when the market picked up, the breadth also eventually picked up, right? So you can get these sort of variations, but when the breadth is towards this level, okay, and we are forming such nice pattern over here, then my expectation will be that the breadth should eventually pick up. And if you ask me, the breadth is actually suggesting that there is a lot of weakness, and it does not suggest by any chance an overstretch.
Um, Hello everyone. Sorry for the inconvenience in the middle of this live. So there has been internet issue going on with Jay's system. So we are ending this webinar unfortunately in between. So we are very sorry for the inconvenience, and we will be having one more webinar tomorrow at the same time. Thank you everyone for joining. And again, uh, this shouldn't happen, but these are some unforeseen reasons or technical things that have happened. So yes, again, very sorry for that.